Thank you very much for coming tonight. Very much appreciated. The weather is finally cooperating. Our last event was this nice storm, and that didn't go too well. But we're very pleased to have two companies tonight. One sector, the first company presentation is going to be Niocan Strategic Metals. It's very apropos right now in this marketplace with electric vehicles and all the talk about doing stuff. So it's a great story. It's just about to start unfolding, so we're going to get to that one. The other one is, I just want to make a comment. The cannabis industry got beat up really bad. The majors got really beat up. There are survivors. We have a survivor tonight, and they're not a survivor. They just did their work very well, and they've continued to just plod along, and they're almost profitable. They're getting to the point where things are doing really well. So don't be, oh, it's cannabis, I don't want to talk about it. It's a great story. We have a great presenter tonight. I listened to him the other day, his presentation, so it's like I know the story very well. So we'll get started right away. The first company, like I said, is NIO Strategic Metals, and with us tonight is Hubert Marlowe. Most of you people in the financial business know Hubert for many years. He's the CEO, the president, chairman of the board,
owner,
and cheerleader. So Hubert, whenever you're ready, go ahead.
Thank you very much, everybody. I'm told that I should conduct this meeting in English, so I shall. However, in the Q&A period, if the questions are in French, I would be glad to answer them in French. I've been associated with Niocan for probably as much as 20 years, and I've been CEO for 13 years. And my partner is Electrum, which is one of the world's largest mining hedge fund in the world. And they own about 45.8% of the company, and my family owns approximately 15% of the company, and the rest of it is owned. Good chunk of that is also owned by friends and neighbors. Let's put it that way, and the rest of it is in the public domain. We have never promoted this company through the period I've been president for all kinds of reasons. But now we feel okay as I will explain, the time it might now be opportune to basically present what we're up to, because the situation and the environment has changed for the better. Most people don't know what niobium is. When I basically got involved in this thing, I did not know what it was. I knew that it was somewhat related to Superman, but niobium is a rare metal. It's strategic, and it is classified by the U.S. Defense Department as one of the 35 that are strategic material. It's rare, and there's only two mining companies that actually produce it, one of which is in Quebec and the other one is in Brazil, both of which are owned by the Chinese. Of course, that makes a lot of people nervous. And here we are, Niocan, which has a full discovery and a proven discovery, not an inferred discovery, nor an inferred reserve. It's an actual discovery, which has been proven by a 43-101, which was done many years ago. That is not to say we don't need an update, but we do know that nobody has mined that place, so therefore the niobium must still be there. It is used in military, aerospace, electric vehicles, and infrastructures, because this particular powder actually makes steel more flexible, harder, and also makes it lighter. So therefore, it is used in aerospace, in infrastructure, in military, and all kinds of other things, where it is greatly needed. Fortunately for us, the Roberval discovery that was done many years ago by Camflo, which was Louis Chignac, for those who may remember, is depleting at a fast rate in our estimation, which constantly means that this could be a replacement if Canada wishes to remain as a major provider of niobium. Over the past few months, we, with the great assistance, okay, of my partner Bruno Demet, we have been able, okay, to solicit support from the Quebec government, from the federal government, and to some extent also from the from key players, okay, in the Mohawk community. I have to be careful in how I basically express this because it's somewhat sensitive. That being said, we, as a result of this effort, we've decided, okay, to basically promote the company more than we have in the past. In fact, we have not done any in the past, mainly because social and political acceptance seems to be much more possible than it has been for the last 20 some years. In this connection, we made several changes, and I have basically 5 of them, but in reality, there's more than 5, but 5 that are probably for this audience is sufficient. We created an executive committee, which is made up of myself, Bruno, the CFO, and a woman by the name of Julie Lemieux. She was the former senior executive for CGI. She is known to be an expert in dealing with Aboriginals, and she is also speaks Mohawk, and and she will be part of our executive team in order to promote the company, and in the hope, okay, that we can get some kind of a deal, okay, to produce a mine there, a producing mine. She has a tremendous amount of expertise all across Canada, and she has dealt with Aboriginals all over Canada with great success. We also added, or about to add, a new director in the name of a person by the name of Christoph Ebling. Now, Ebling lives in Germany, and Ebling's father and him owned a company called Camet, which was the sole independent marketer and sales of niobium in the world. And they were basically the people who were responsible for selling Niobex, niobium here, there, and everywhere. So we're very lucky to have a guy, okay, with a tremendous amount of expertise in that particular field, which will be joining our board at the next AGM. We're also going to be doing some geophysics, okay, on the property this summer. And the reason why we're doing this is because eventually we're going to have to do a bit of an update on our 43101. And we just want to prove to the world that nobody has taken that niobium out of the ground, so that can be left for us and you. We're also about to engage, okay, a specialized firm that basically deals, okay, with social acceptance. We're expected to, we have been speaking with them, and we feel ready, and they feel ready. The time has come for us, okay, to engage professionals in the hope, okay, that we'll be able to get that social acceptance. Because at the end of the day, it's all about the social acceptance of that mine in the Yoka Valley. So I think I said everything I needed to say, and I will stop there, and I will and take questions if there's any.
So if you're gonna take the mic to the people and then they'll ask you questions.
Oh, good.
What percentage of the company have you given to the Mohawks? And do you have a rich major strategic partner to help you?
We have not given any percentage to the Mohawks, evidently, and the reason being is that we never really negotiated with them officially or unofficially or secretly with them about what would be the deal. Now, if you're asking me the question, are we prepared to make a deal, where there would be an NSR, where there would be, yes, we are definitely ready to do any deal that would basically would lead, okay, to an eventual exploitation of the mine site.
So you mentioned in your your presentation that you haven't promoted the company. Why have you not promoted the company, and why is it not socially acceptable?
Well,
I'm not finished. So.
well, I mean, I really cannot. The reason why we never promoted the company, I can start with this one, is because, in part because of my partner. My partner is Electrum, and Robert Kaplan always told me, he says, Hubert, what I have here is a Rembrandt. He's a collector of Rembrandts, Dutch masters. And he says, the reason why I want to own this thing is because eventually one day it will be a mine, because this is a very rare mineral, and at the end of the day, something will happen. Now, yes, go ahead.
Okay. Conditions are completely different. Okay, it's a critical metal. Doesn't exist that much, and the conditions that were in existence 10 years ago are completely different. So are the way the processes. Right now, what we're talking about is a way to mitigate risks as much as we can, and that we hear people as far as the risks, as far as water is concerned, environment, air, sound, whatever there is, it has to be taken care of, and that's why the communication channel has to take these into consideration. It took some time to getting ready as far as updating these processes, and that's something that is ongoing, but it does exist, and that's also a way in order to gather the social acceptance from the municipality, because nobody wants to get a mine within their own backyard. That's the reason why we've got to adjust and making sure it will meet new sexy words such as green mining, such as we'll make sure everything goes by the book and we mitigate risk. But that's exactly what we're doing. We don't say more, we don't say less. This is what needs to take place.
So you mentioned that it's very important to get the Mohawks on board, and you haven't even talked to them yet. Why is that?
Okay, we're discussing we're talking to the real people. Basically, that's the strategy as we speak. Mohawk are part of it, and they are also being contacted, and they will be part of the next step.
Thank you.
No doubt in my mind.
I,
But we started discussing with the real people.
the bottom line is that up until recently, there was really no negotiation, because there were, when you negotiate or bring talk, you have to go to the table. By not going to the table, okay, there's no point talking because nobody's at the table. You're talking to yourself. Now, there is indication that is better now than it has ever been. And of course, is the reason why we are ready to spend more money to get this project ongoing. It's difficult to answer your question precisely because the other party is not here.
Oh, okay. Yes. Will you complete your permitting within the next 24 months?
Sorry?
You're permitting. You're permitting. I'm sure you've started a process of permitting. A second question: what would your net present value be? What's your tonnage?
Well, it's an important question.
Mm-hmm.
My understanding is, okay, I'm not a geologist nor a mining engineer.
Okay.
I'm just Hubert Marlowe.
Okay.
Okay. So there is a significant, resource there, proven. I've seen let me answer the question. I've seen numbers that are as high as a $1 billion worth of reserves there. Okay. Now I didn't. This is based on about. So it's a commodity which is relatively expensive when you compare it to copper and zinc and many others. So it's, you don't need to have a hell of a lot in order to have an impressible amount, of value. What was the other question?
Yes, you're permitting. It's going to be complete in 24 months. Will you have all your permits in place?
Oh, okay. Well, 24 months, so it's certainly be a nice goal.
Correct, and
That is really
This one.
something we want. Yeah, I would say 24 months. There's a possibility we might be getting permitting. Am I correct in saying that?
That's okay. Let me answer a different way. Okay? There's $1 million plus sitting into the bank account right now to be devoted towards the project. It calls for updates. It calls for making sure everything is, everybody would be pleased in order to get the social acceptance. That's key in our opinion right now. But we've got resources in order to making sure we could meet goalposts. It calls for various steps. It's a very challenging because, I mean, don't forget one thing. Lots of studies were conducted in the past, but the region was the region. Now, as I said, conditions did change. The economical standpoint has changed as well as far as the local environment. And those are favorable conditions as we speak.
I would like to say that there's not much of an environmental risk, okay, for this particular type. First of all, it's underground. Number two, it's one truck load per day. So it's not open pit. It's basically going down, take it out. There's a truckload that goes. I don't know where it's going to go. Probably going to go to Valleyfield. It will go wherever there is industrial permission in order to turn this thing into a sort of a 5 alloy, or just ship it to whoever basically wants it.
Okay, this is really important. What's the nature of your agreement with Electrum? What share of the expenses are they brunting, and what is their arrangement? Is there an
I run the show. Okay.
Okay.
Which it boils down.
They're not spending a penny then.
Well, they do. They basically gave us millions
I
of
thought
dollars,
so.
okay, over the years, and gave us, okay, and basically forfeited, okay, their loans, okay, back to us in the form of shares. So
In the shares.
they gave us a. Without them, we wouldn't be where we are.
Okay, I understand now. Thank you.
Hubert, I want you to read what it says on my hat.
Complain.
No, above
Comply?
that, NI 43101.
Oh yeah,
He
good.
said
Okay, I was reading the
Compliant.
letters. I don't.
That's what I want you to
yeah.
be.
I have a hard time reading letters.
Oh.
you're
No,
not
dollar
making-
sign. No.
I have easier time reading numbers.
Did you make a presentation at the prospectors, or were you at the prospectors?
No, I did not do a
Okay.
presentation. We were not ready for it. I mean,
Yeah.
it's very easy to make presentations.
Well, 25 years ago,
I know.
it was big. I remember they had
Yeah,
one out
yeah.
eastern Quebec.
Yeah.
And around Montreal, they were complaining about the environment.
Well, I
That's all they
don't.
complained
I don't want to basically blame anybody for all of this, but the previous management of this company basically missed on an opportunity by not being amicable, okay, in the process of negotiation.
We're going to have to call this for now. Hubert's going to be around. Burrow's going to be around. I am also in the capacity of their trader on the floor of the exchange. Well, we used to be the floor of the exchange. So if you do have any questions, I know this story very well. I talk to Hubert on a regular basis, Bruno. So you can ask me questions as well. Now, this next presentation is Cannara Biotech. They're a Quebec-based company. They're in the cannabis space. With us tonight is Nicholas Sosiak. You're the CFO. So you're going to get the real numbers, real picture, and everything else. So whenever you're ready, go ahead.
Thank you, Paul. Good evening, everyone. Like Paul said, my name is Nicholas Sosiak. I'm the Chief Financial Officer of Cannara Biotech. Cannara Biotech is traded on the TSXV under the ticker LOVE, L-O-V-E, on the OTCQB, LOVFF, and on the Frankfurt Exchange. I'm going to jump right into management, which is at the end of the deck. But with every good company and every business model, there needs to be a sound management team behind the operation. I'll introduce myself first, Nicholas Sosiak. I'm an accountant. I'm a CPA by profession, but I have a passion for cannabis ever since I was 15 years old. I smoke a lot of weed till this day. It honestly helps me work. I don't know why it doesn't get me stoned. It just actually motivates me, helps me get.
I have to say one thing. We had a little bit of miscommunication about the time and everything, and Nick said, "Look, I'm not rushed to that." I said, "You're a pot company, so You'll be fine. You'll be fine. But I apologize. He wanted to dress up anyway. That's
Thank you, Paul. But like I said, I'm a cannabis guy. You know, I grew up smoking cannabis, watching cannabis consumers smoke cannabis. I've been to LA, New York, all the big states. And me by nature, I'm a perfectionist. You know, I did all my school. I got through school with an A+ student. Whenever I put my mind to something, I go all in. So I knew when it was the legacy days that if I were to go into cannabis, it would be a pretty big operation, and you know, I would have to always be watching my back. So what I decided to do was go to school, go to accounting, get a CPA, and then one day maybe it legalizes and the stars align. And that was 2017 with the legalization in Canada. Stars aligned. I used to work at Dundee 360 Real Estate Corporation. I was the VP Finance there, designing. Did the Queen Elizabeth renovations, did Royal York renovations, did projects in Cuba, in Croatia, in France. But real estate, although it's fun and you can make money, wasn't my passion. So I looked to the cannabis sector and I found Cannara Biotech, which was just starting up by our president and CEO, Zohar Krivarat. Zohar comes from an IT background, and back in the 2000s, he developed or found a gap in voice over IP, where calls made by voice over IP phones would not connect to the police station, police force to be able to pinpoint their location. So through his IT background and with his brother's background, developed an IT program that was then sold to West Telecom in 2014, and then was looking for a new opportunity. Not a cannabis guy per se, but saw the amount of money that was being made early on in cannabis and was one of the first few to jump into the sector. And he jumped into the sector with his partner. This is our board of directors, but main partner is Derek Stern, vice president of Olymbec Investments and Developments. And Derek provided our first facility. So we started in 2018 with the acquisition of our Farnham facility. This one right here. And Farnham facility was acquired by Zohar back in the day as a private company with his partner Derek. They both own today over 50% of the company. So between management holds over 50% of the company. And they started this project with Zohar really going knee deep into designing and building a cannabis facility, not knowing really how to grow cannabis. And I think that's a lot of problems that we saw today in the market, in the cannabis market, is that people thought they can buy cultivation or buy the expertise behind growing cannabis at scale. And unfortunately, no one has ever done it at scale. People relied on the legacy market, the old growers that did it in their tents or in 2,000 square foot rooms, and didn't do it. In this case here, we had 170,000 square feet, 2 harvests a week of 2,000 plants. There was a lot of money being generated in this facility. And early on, we saw that legacy growers, the black market, couldn't scale up. And that's where we differentiate ourselves. That's where Cannara really took on a different model. As I said before, I'm the CFO, so I do all the accounting, public statements, but I'm also the brand designer. I'm the research developer. I do the product design. I do the marketing. I do all the sales. I lead the sales team. So I move that aspect of the business. But what's interesting with us is Zohar found a passion for growing cannabis. So he realized early on that these people we couldn't hire this expertise and we'd have to learn it ourselves. So Zohar became our master grower and is, till this day, our CEO drives 3 hours a day between all of our facilities, and I'll go through them, spends 8 to 10 hours a day in each facility, knows the process from A to Z, and is able to really be efficient in the cannabis cultivation. So we are Cannara Biotech. We're 100% vertically integrated. That means we grow, we control the whole process all the way to packaging. We have our brands, and right now we sell to the government. Most provinces right now is government reign. So in Quebec, we sell to the SQDC. In Ontario, we sell to the OCS. In BC, BCCS, and in Alberta, AGLC. So our clients, our 4 main clients, are the government. We are the 4th largest producer in the cannabis sector right now by square footage. We have 2 mega facilities. I just showed you one, and I'll go through another one. We have 2 mega facilities in Quebec that measure over 1.6 million square feet, and we own Cannara owns these both assets. We currently serve Quebec, Ontario, Saskatchewan, BC, and as of May 1st, we're in Alberta, which is Canada's second largest market, cannabis market. We have 3 flagship brands, and we're scaling extremely, extremely fast right now. So while, like Paul said, the cannabis sector is very shaky right now, people are losing money, there's a lot of CCAA processes. If you look at our business model and you look what we're doing, we're actually the only ones in the sector opening up cultivation space right now. We're actually the only ones increasing quarter over quarter sales. And I'll go into why we're doing that, but just to show you the scale, we're at 30,000 kilos as of August 2023. And prior last year, I was at 11,600. And the year before that, I was at 5,000. Between both of our facilities, I can go up to 120,000 kilos without other than CapEx charges on my facility. All the assets are owned and are able to scale us up to 120,000 kilograms, which is, we're only about 30% of our project right now. This is our corporate milestones. So like I said, an idea came up by Zohar in 2018. We raised 55 million by going on the CSC under the ticker LOVE. We launched our first facility at Farnham, 170,000 square feet. And then we targeted our first market, which is Quebec. In 2021, we started in Quebec. And the day we started, completely sold out of our product week over week over week over week. And I'll go into why our product is selling, but it's because we've created the ultimate value proposition. We then uplisted to the TSX in April 2021, TSXV, in April 2021. And then we changed our corporate profile. We changed our company totally in June of 2021 when we acquired the Valleyfield facility. So for those who don't know the cannabis market, there was a big behemoth called TGOD, the Green Organic Dutchman. They raised over $500 million and invested $275 million into a purpose-built, state-of-the-art 1 million square foot greenhouse in Valleyfield. Bells and whistles, everything. We have a 75 megawatt power station built onto it that directly from Hydro-Quebec. And because this is agricultural zoned in Valleyfield, we pay 3.5 cents a kilowatt, which is the lowest cost of electricity in the country and happens to be the biggest factor in cannabis production. We launched, so once we got our facility, so back here, we had a problem because we were selling out in Quebec. Only one province, our little 170,000 square foot, completely sold out week over week. Then we landed on an opportunity of a lifetime where they invested this beautiful building. They couldn't meet the bank payments on it. There was about $27 million left to owe, and the Green Organic Dutchman couldn't make final payments. And then another big bottleneck or big barrier was that in order to buy an agricultural asset here in Quebec, your company needs to be 50% owned by Quebec residents. So thankfully, through our share ownership with Zohar and Derek, we were owned, Cannara is 50% or more Quebec resident, and was able to buy the Green Organic Dutchman's facility for $27 million, 10 cents on the dollar. We then expanded with this beautiful facility, which I'll go into. We then expanded into Ontario, Canada's #1 cannabis market. Quebec is 4th. So we started in the 4th market. Now we went into the 1st market in October 2021. I'll go into more detail about this, but in cannabis, much like fashion, you have to stay ahead of trends. You have to understand what the market trends are. So you have to work with what they call cannabis breeders, the one that actually create the type of genetics or the type of tomatoes that we grow. So I'll go into detail about that, but we have a US exclusive partnership in Canada for the #1 breeder in cannabis, and that's licensed here in Canada for us. In September, we launched into Canada's 3rd largest market, BC. We also licensed our original facility to be GACP. So Canada is very unique in cannabis production because it's the only hub in the world that can export cannabis. So by having a GACP license, I can sell to Germany, I can sell to Israel, I can sell to Australia. To date, we haven't. I have POs and orders and contracts, all that, but we are focused on Canada because there's a true opportunity here. And in March, we launched in Alberta and launching our products starting in May. And then I'll go into our other facility, but we have 9 activated zones right now. And we are financed. We have a $50 million loan that we received in last year by BMO Capital, BMO. And just recently on May 1st, a couple of days ago, they upsized our loan by $10 million. So for just going a little bit into our financials, and I'll go in depth later on, but we generated for our second quarter of fiscal 2023, we generated $13 million of net revenues. And for the first 6 months, we generated $23.5 million. We're on a trailing 12-month revenue of $45 million right now. We've increased our production. Last year, as of August, I was at 6 rooms, and now I'm at 9 rooms. We, like I said, we just got we have a $60 million credit facility with BMO in this current market decision, especially in the cannabis sector. I think it's a feat, and they really understand our business, what we're building. We also reported our 8th quarter of adjusted positive EBITDA and free cash flows of $1.9 million for the quarter. We have extremely strong margins in the cannabis sector, and that's because we're built in Quebec. That's the key here. We could not do this business in any other province in Canada, but being in Quebec and having access to the lowest cost of electricity and basically free water, we're able to make 40% gross margin on our business while pricing our products at value pricing and offering the highest quality we can, which is why our products are selling over week. I walked through our Barnham facility, but again, we're diligent. We like to crawl, walk, run. We understand the cannabis sector is shaky. So we like to understand, we want to be the last survivors and be Canada's #1. So what we did here, we scaled at the beginning at 170,000 square feet in our 625,000 square feet facility, but we rented out, we leased out our 455,000, earning about $8 to $10 annual rental income. So that helped finance the initial business and why I kept achieving quarter over quarter positive adjusted EBITDA on my quarters. Then we acquired this beast, which is the Valleyfield facility. Purpose-built cannabis facility, state-of-the-art, beautiful, 1 million square feet. This is our 600 square feet zone. There's another 200 square feet rooftop and a processing center. And this is divided into 24 zones. Each zone is 25,000 square feet, holding 10,000 cannabis plants. I roughly make about 80 kilograms, just rough numbers here, 80 kilograms per plant, 80 grams per plant, which is about each harvest, each room is about 800 kilograms, and I make about 3 to 350 on each gram. So each harvest that I do here is about $3 million, and I can do 4 per year for each room. So I'm on 9 rooms right now, and we have the ability to scale up to 24, and we're just doing it slowly but surely with the market demand. There's just a view of the inside of the facility. Cannara, built on quality, so everything we do, we take the slow approach in terms of, even if it's going to cost more, we work it in our cost structure, we work in our price to achieve extreme quality at an extreme value pricing. So that means hand trimming all our plants. We're 350 employees right now. Probably 100 of them are hand trimmers working day and day just trimming our cannabis plants. And that's because it keeps the quality. If you use a machine for that, to date, there hasn't been a machine in the cannabis sector that can preserve the quality of cannabis. A lot of LPs ran to automation because it was the easiest, cheapest thing to do, but they didn't understand the market and the consumer. We also made sure that part of our core principle is accessibility. That means in everything we do, all our products, all our pricing has to be accessible. We want to be the Coca-Cola of the weed industry. We want to be priced so that you can have our product every day, and then you venture off when it's your birthday, your friend's birthday, you might have another product, but our products are meant for everyday use, which is why our core pillar is accessibility, and then staying true to our brand culture. This is our partnership with Exotic Genetics. Again, part of the cannabis industry is understanding genetics. In order to make more SKUs in the market, to sell, make more money and revenue, it all starts with genetics, which is the type of cannabis plant, because there's so many different flavors, effects in cannabis, genetics determine that. And as you can see in the market, every 3 months, 4 months, products are just flipped over and over because of new genetics that come in. And it might not Might be just a little flavor change or all that, but mostly also the name change, and there's a marketing hype behind it, just like in fashion. We have 1.6 million square feet. We're the 4th largest producer in terms of production square footage. And this is our roadmap in terms of how we're going to scale up in terms of production capacity. Right now, we're about 6,000 kilos per quarter. And every quarter that goes by, I'm opening more rooms and then scaling up heavily in 2025 as we're in every single Canadian market. Then we scale up on the east side of our facility. And by 2026, our project in Valleyfield will be complete, and that's our phase 1. I had touched upon this before, but just to give you a visual aspect, in terms of the lowest cost electricity is Quebec, which is again the largest cost input in cannabis production. Also, we're built in Quebec, which has the highest barriers of entry for other competitors to come in. Quebec favors Quebec-based producers, right? So they have a barrier against new entrants. It's very hard to get in Quebec now. I get calls from all the big suppliers trying to use our license to get into the Quebec market because it is a big market, but yet there's high barriers of entry. So being in Quebec allowed us to really carve out a huge market share. And on top of that, in Quebec, you're not allowed to market cannabis. So I'm not allowed to spend a single dollar on marketing in Quebec. So word of mouth is huge, and being built in Quebec and established in Quebec is huge. And what that does, it created us a sustainable revenue stream to be able to go into higher competitive markets like Ontario, BC, and Alberta and start dominating in those markets. In Quebec, I'm 3rd place in market share with a 10% market share. The 2 above me is Afria with an 11% market share and Pure Sun Farms at 11% market share. But if you look at their monthly growth in market share, both of them have been decreasing. I've been the only one increasing. And that's all because of our value proposition. Early on in all our products, we said we're going with a penetration strategy, which is the top end quality, the best we can do, because take advantage of the cost structure here in Quebec and make a reasonable margin of 40% and then pass all those savings on to the consumer. So we adopted a low price, high quality strategy, which creates a huge differentiation in our product, especially that consumers can't see the product before they buy it. So a lot of their decision power making is done on price. And if we want to sell volume like we're trying to build, price was extremely important. I'm going to skip to currently through this, but these are our 3 brands. We have Tribal, we have Nugs, and we have Orchid. What I just want to touch upon this is 2 things. We have 36 active SKUs in the market across the whole country right now, generating $30 million. My competitors have over 600 SKUs. So it's not because we haven't developed SKUs or have the ability not to develop SKUs. It's because we're creating SKUs that work, that sell, and we're growing with our demand. My second point here is that most of these sales, probably 80% of it, is cannabis 1.0 products. That means dried flower. There's 2.0 products and 3.0 products, which are resins and extract products, which have been really sustaining, call it the market, this time around. And we haven't even begun to play in that. We just started this quarter. So our revenues right now is pretty much cannabis 1.0. We have even more growth with cannabis 2.0, more growth with SKUs, and more growth with increasing our market share in markets. Cannabis is not dead. We're a $5 billion market today in 2023, on track to be $7.6 million just in Canada alone. And then going back to that, we are again the export hub in Canada. I can sell to Israel, Australia, Germany. So that's not even including in Israel, Germany. So I think, our board thinks, our management thinks that we are perfectly prime position right now. While all our competitors are trying to struggle, haven't built the right business model, are not able to scale, the financing tap is closed. Well, there's only 2 avenues for them, mergers and acquisitions, which has already been proven in the market to fail. If you look in cannabis sector, any merger and acquisition has not provided sustained growth for them. They've lost the ability to grow, to raise capital, to expand operations and all that. So they really have to try to sell. And if you look at their sales, they're losing quarter-over-quarter growth in Canada, and they're relying on international markets to succeed, which is a perfect formula, perfect time for me to scale up in Canada and take a huge chunk of this $5 billion market. I'll just skip over here. This is our, in terms of revenues, we closed the quarter at 11.7, about 30% growth since my last quarter. This quarter, I was about 6% market share in Quebec and about 2% market share in Ontario. Today, as of April, I'm 10% market share and 3% in Ontario. So already from here, I've scaled up, and we're scaling up quarter over quarter. I have one salesperson. Everything that to date, this $30 million has been done through one salesperson, word of mouth, and our value proposition. Now we're turning on our marketing engine, we're turning on distribution channels, we're entering new provinces. So for us, every quarter that we look by is a rear view mirror. Like I said, we're in Quebec, Ontario, Saskatchewan, Alberta, the second largest market in Canada. So we are working to create a large impact, scaling into BC, and then eventually the maritime zones. We manage 8 quarters of straight EBITDA, and that's because of financial diligence, even while scaling our million square feet from growing from 100 employees to 350 employees, we were still able to create this positive adjusted EBITDA. So still sustaining our operation and just keep reinvesting quarter over quarter to see this growth. Zooming for our financials, Q2, which was February 2023, about 2 months ago, closed the quarter with $4.1 million of cash, and then received our $10 million of cash from BMO. In our current assets, we have about $8 million from government receivables, which is 100% guaranteed. It's Ontario and Quebec. Our current debt is pretty much just BMO capital markets, and quarterly revenues of $13 million. Gross margins of right now this quarter, we took a little, it was our first write down ever, so a little bit of negative news here is in the cannabis sector, let's say write downs have been abundant. This was the first quarter that we took a $1.4 million write down for aged inventory that we said, you know what, it's not for our products. But then the subsequent quarter, I sold it for 50% of its value. So I already recuperated $700,000 of that money. If you remove that impairment, we're at 42% gross margin, which is what we've averaged quarter over quarter. We're EBITDA positive, barely net income positive, free cash flow of $2 million for the quarter. Just a chart on showing you the revenues and our gross margin levels, and a comparison with our competitors. So we might not be today the largest by revenue, but we are the largest by revenue growth. We are the largest by revenue margin. And every quarter, like I said before, every quarter that goes by, we're increasing production, we're scaling organically. We're about a 77 today. We trade about 85 cents with a $77 million market cap today. We already went through our leadership team, again, is extremely passionate. I work day and night. Zohar works day and night. Our Avi works day and night. We have a strong team of VPs and people that in each division, marketing, cultivation, that are moving the needle every day. And with the demise of certain LPs, opens shelf space for us, and we're just getting started. The amount of SKUs that we have left to do, the amount of products we have left to launch, the amount of, I'm only 30% of this big project, and I could build a whole phase 2 on the land that we have right now. So I can even double. That's phase 2 and 3, and we'll talk about the future. But right now it's a 2-year plan, focus on Canada, dominate, be number 1, potentially use our US license arrangement with Exotic Genetics to enter the US, and also our GACP license to potentially export and build brands in Israel, Germany, and Australia. Thank you, everyone.
Excellent presentation.
Thank you so much. So we're going to take questions. I'm going to pass around the mic.
Great presentation. I'm just wondering about your number on free cash flow this quarter. Like, if you weren't massively investing in the business going forward, that 1.8 million would basically just
Be my
fall?
EBITDA about minus the interest that I have to pay.
Okay,
So call it 2.5, 3.
okay. So it's real cash. That's
Yep.
after business
We spent
expenses.
in the past 6 months, we spent $5 million on capex alone invested into our business.
Yeah.
So we're just taking the money that we're earned and reinvesting into the development of more rooms.
Okay. So it's just going to compound here. Okay, thank you.
Anyone else? Oh, okay, hold on.
To use the pot vernacular, you blew my mind when you said you have 10%, somebody else has 10.5%, somebody else has 10. Who has the 70%?
All the others, it's divided amongst there's about, on my slide, I had 120 just in Quebec, LPs in Quebec. There's probably 700 in all of Canada. So that it's divided at like 1%, 2%.
So none of that is the clandestine market.
No.
How much is the clandestine market?
The legacy market, you're saying, like the
Yeah, the black market.
The black
Outside
market.
of you guys.
No, I mean, I can disclose what the SQDC reports, which I have no validation if that's true or not.
I
That's
know,
what they
it's
say.
hard
They
to-
say they captured about 55% of the black market.
That's your guy, Tim Hortons.
But from personal experience, I mean, you can see it. There's probably about 30% left, 40% left.
And that huge plant that you got, I mean, it wasn't just simply, I mean, they just couldn't make ends meet and all of a sudden you flew it.
Back in the green rush days, it was get cash,
Thank you.
build the
enough.
biggest project you can, and then once they built it, they were like, they had no cash to hire the first person to come in, right?
Taking over.
Yeah, it was honestly stars aligned there. I can't even fathom how that happened, but it did.
You mentioned social media. What impact does that actually have in Quebec since you cannot advertise?
What impact does social media have on us?
Word of mouth.
Word of mouth. So word of mouth is huge for us in Quebec. When we launched, the amount of social media, like call it virality of our products, in social media, there's memes, what they call it, and pictures and all that. We have all kinds of a library full of people that ran to the store, piles of our product just running out because it just had such a high value proposition. So that started the movement. And I mean, in the past 4 months, I grew from 6% to 10% market share with 0 new products sold in Quebec. So all that was just, I had more availability to offer to Quebec and they take it. And that's word of mouth. Quebec's doing me a favor by barring my competition and not allowing to come in here. And the other provinces are not allowing me to play in their hometowns. So it's a win-win situation for us. Sorry? I mean, once you're in, right? So once you're in a province, you're in a province. So for now, will it last forever as long as we keep doing what we keep doing in Quebec and keep innovating with new products? Yes, if I stay stagnant, it's not gonna last forever. But like I said, with our partnership with Exotic Genetics, bringing new genetics, creating new products, we are the trendsetters in the cannabis industry, which creates that word of mouth and creates that sustainability in Quebec.
Yeah. Sorry, at what price you have done your last financing?
So we've only raised at, can be a bit confusing, but $1.80, $1.80. We just did a 10-to-1 stock split. We were at 10 cents before, so now we're at 90 cents. But we were at 18 cents before, so we have not raised. We've only done an initial raise on the first project at 10 cents, which is $1 today, and then at $1.80, and we're trading at about 70 cents today. TSXV, exactly. Venture. It's the venture. It's the smaller exchange.
It's 2023.
Why aren't you aggressively going after your markets like Israel and the other countries you mentioned? Because the Canadian, it's saturated. There's 3 companies higher than you doing business here. So why don't you go after these foreign countries?
Yeah. So for me and for us, we are going to start slow in those countries. But for cannabis production, you can't just turn on your dial and expect to keep that quality and consistency time and time again. You have to do it a very slow approach.